Fabiana, thank you very much for joining us. Capital creation has been going smoothly so far, and it's been a real opportunity for us to hear from the industry what's going on. And for you, what have been the key projects and goals that you're focusing on from now for the next 6 to 12 months?
Well, Emily, thank you very much for having us, and congratulations on Capital Creation 2013. It's been wonderful being here. The projects that we have at Lavka, we focus a lot on research and also on public policy issues. So there are a lot of developments happening on the regulatory front that we're very keen and we're keeping a very close eye on, particularly in some of the smaller markets like Peru, Colombia, and also the developments in Brazil. The market is opening up in Brazil quite a bit. Institutional investors have traditionally allocated to private equity locally. Now they're able to allocate it internationally, so we continue to keep a close eye on that too. So Mexico also continues to be a very good market for us. The markets are opening up quite a bit. The institutional investors, known as Afores, they now can invest into private equity over the last five years or so. They have recently been allowed to invest in fund of funds that also in Mexico, and we are expecting that the next development is that they will be able to invest internationally. So Mexico has been attractive, quite a bit of interest both from a fundraising standpoint as well as from an investment standpoint as well.
Absolutely. And is there a difference, do you think, in Latin America that you see with funds that have been able to raise significant and hit their targets and those that haven't been able to?
Oh, absolutely, yes. What we have seen over the last 6 months or so is that a lot of the country-focused funds, particularly some of the smaller countries like Peru and Colombia, have been able to gather a lot of attention and fundraising dollars as well. I think a part of the dynamic is that the international investing community has been more familiar and has become more comfortable with country funds. And in fact, the reason we know that is because at Lavka, we collect data from the GPs, both from fundraising, deals, and exits. And what we have seen in the first half of 2013 is that the fundraising dollars have actually doubled the same, the previous period, with about $3.9 billion. And all of the funds and most funds that fundraised in Mexico, Peru, and Chile have been able to not only raise their targets, but also most of them have been oversubscribed. So I think that the key thing is understanding where the dynamics are from an international LP community as well, and understand how they are getting more comfortable with those country funds, and also obviously perform, right? So now I think Latin America has done a very good job in attracting the money, and now we continue to be very watchful to make sure that these monies can be put to work for the good of the countries and also obviously for returns of the LPs.
Absolutely, and there's that delay in the time that it's taken for them to attract the money, but one of the key messages we've heard over the past day and yesterday is that there have been some mistakes made in private equity, that you're encouraged to recognize those mistakes and learn from them. Would you say there are some mistakes that have taken place in US, Europe, that the Latin America markets are looking at and learning from to go forward?
Oh, absolutely, yes. Again, if you look at Latin America, back in the 90s, there was first wave of private equity managers. I think that the industry as a whole has been able to learn a lot from the mistakes and from what was done at that time. I think also that the markets have been evolving quite a bit. While in the past, a lot of the deal flow and a lot of the allure of Latin America had been on the commodity side, I think now there is a consumer class, there are demand for education, financial services. So I think overall the industry has been very adaptive in understanding what are the drivers for macroeconomic growth and how they can plug into those sectors. And also what we see is that there's also a desire to create projects that aligned with the development of the country, particularly a lot of infrastructure projects, but not necessarily are attached to government policies or they are public and private partnerships. So I think these are some very key changes that we have seen in the industry over the last, I would say, 5 to 10 years.
Definitely, and having that focus on improving the environment, sustainable projects and infrastructure, very valuable to the countries. Yeah,
absolutely, yes. And I think you raise a very good point as well, because ESG Many participants in the private equity ecosystem, both in the country and international, are very keen on ESG and SRI issues. So this is something new as well. Today when we talk to GPs, they understand very well that they need to comply with IFC standards or other standards, and that there's no skirting around, that there is a very thorough due diligence on those ESG issues, particularly still on those investment theses that deal a lot with commodities, such as mining and agriculture and timber funds and the like.